I also tell you that Federal Reserve Chairman Jay Powell meeting with President Trump yesterday to discuss the economy was the first such meeting between the president and the nation's top policymaker since that informal dinner, you might remember it last February. And Steve Liesman joins us now with more about what was said and what was maybe eaten.
No, I cannot get any intel on the food. I had the scoop last time, you'll remember, on the steak. Nobody else had the steak detail, but we're trying to figure out if coffee was served. It's kind of quiet. But look, having first described the meeting with Fed Chair Jay Powell as good and cordial, the president took to Twitter last night to return to form and complain about monetary policy. Here's what he said. At my meeting with Jay Powell this morning, that was last night, I protested fact that our Fed rate is set too high relative to the interest rates of other competitor countries. In fact, our rate should be lower than all others. We are the U.S. Too strong a dollar hurting manufacturers and growth. That statement lacked the name-calling and over-the-top criticism of the Fed from the president's other tweets, so perhaps the face-to-face meeting had some modest impact here. The Fed had said in its statement earlier today, yesterday, Chair Powell's comments were consistent with his remarks in his congressional hearings last week. He did not discuss his expectation for monetary policy, except to stress that the path of policy will depend entirely on incoming information that bears on the outlook for the economy. Powell's been pretty clear that the Fed is not at this point going to reduce rates in order to target the dollar. Officials have said rates are higher because, as the president himself has argued, the U.S. economy is far stronger than in Europe, and stocks have surged while the chance of Fed rate cuts have declined. December, just 0.8% probability of a rate cut next month. And then you got to go all the way out to July till the market's taking kind of like a hedge on possible rate cut of 25 basis points. So curiously, the market and the Fed now in the same place on the outlook for rates, the president in another place. Melissa?
Seems like it depends on the trade war. I mean, the markets are trying to factor in what the Fed will do in response to a trade war, and so it gives itself enough time to sort of clear the decks.
A brilliant comment, Melissa, that gives me an opening for an answer here, that the Fed funds futures market is not responding to the possibility of an increased trade war. And I think the stock market itself seems to be divorcing itself from the trade news. Don't you think?
I agree.
I mean, yesterday was bad trade news, and it didn't seem to
If you close your eyes,
right?
right, and you heard the headline,
and you would know.
The units report that, you would think the S&P would be down 20 handles.
Right,
you know,
for
20
Dow
points,
300.
30 points or whatever it is.
You wish.
And, and it wasn't. It was basically flat yesterday on the day.